Three strong buy stocks to watch as the second quarter 2022 kicks off. Now, last year was marked by strong GDP and corporate earnings growth as the economy reopened and the workforce got back to work post-lockdowns. Stock rose too, reaching record highs by year's end. That all crashed to a halt this past January. This year got started with a steady drop across the main equities indexes, especially on the tech-heavy Nasdaq. The market troughed deep in corrections in mid-March. Since then, they have rebounded and the stock market losses have moderated. Year to date, the S&P is down approximately 5%, while the Nasdaq is down approximately 9%. Against this backdrop, we found three stocks that may bear a close look in the second quarter of 2022. According to the analyst community, these are all strong buy equities with upside potential starting at 50% and lifting up from there. ESS Tech, GWH. We'll start with ESS Tech, a company working on modes of long-duration energy storage. This is an emerging field given an impetus by a number of tailwinds that include green tech, grid stabilization in electric vehicles. ESS Tech focuses on development, production, and installation of ion flow batteries, a new technology that promises to avoid the drawbacks of traditional chemical batteries, such as short life cycles, charge reduction problems, overheating, fire hazard, and corrosive chemicals. Among the specific advantages of ESS's ion flow systems are a 20 to 25 year life cycles, encompassing more than 20,000 charging cycles without degradation of functions, flexible energy storage of 4 to 12 hours, and application in electric grid stabilizations. ESS was founded in 2011 and since then has become a leader in long-duration battery tech. The company was the first of such firm to enter the public market in the US through a SPAC transaction last autumn. In October of 2021, ESS merged with Aecon S2 acquisition, gaining approximately $308 million in gross capital from the deal. The GWA ticker started trading on October 11 and peaked above $28 the next day. Since then, shares in ESS have fallen steadily and the stock is down 80% from the peak value. In February, ESS released its financial results for the fourth quarter of 2021 and full year 2021. The release included the quarter in which ESS went public. While the company does not yet have a revenue stream to report, it did have two important operational updates that bodes well for future income. First, ESS reported that it added 54,000 square feet of factory space to its Wilson, Oregon production facility during the quarter. For the year as a whole, ESS doubled its factory footprint to 200,000 square feet. In the second operational update, one which with more direct bearing on future receivables, ESS reported that its shipment forecast for 2022 is 100% booked. Overall, ESS has 6 written reviews, including 5 buys and 1 hold, making it analysts' consensus view a strong buy. The $12.50 average price target suggests the stock has 122 upside potential from its shares price of $5.63. BioVenture BVS. Next up is Bioventus, an innovative healthcare company. Bioventus is focused on active healing with a line of products that relieve bone and joint pain, offer restorative therapies, or give surgical solutions. The overall aim of Bioventus is to reduce the need for difficult orthopedic surgeries and delay or simplify those procedures. The company's products include an ultrasound bone healing system, Exogen, several osteoarthritis pain reliever, and orthobiologic product designed to make orthopedic surgeries less invasive and easier to recover from. In the final quarter of 2021, Bioventus announced a major expansion of its manufacturing facilities. The expansion is to a new location in Memphis, Tennessee, and will involve transferring 116 employees to a new, larger facility. Now, Bioventus plans to remain at the new location for at least 5 years, during which it plans to add up to 40 new positions. The move is scheduled to begin during the second half of 2022. In March of this year, Bioventus announced that the FDA had given 510K clearance to the company's StimRouter. This product is a neuromodulation system used to treat chronic pain originating in peripheral nerve exclusive of craniofacial pains. The device uses external electric field and is considered minimally invasive. And Bioventus went public just over 1 year ago, and in 2021 saw its revenue increase from $81 million in the first quarter to $130 million in its fourth quarter. The strong buy consensus rating is based on 4 analyst reviews that include 3 to buy and 1 to hold. The shares are selling for $13.63 and have a 1 year upside of approximately 58%, based on an average price target of $21.50. Global Blood Therapeutics, GBT. The last stocks we're going to look at is Global Blood Therapeutics, a biomedical research company working on new treatment for the amelioration of sickle cell disease, SCD. This blood condition is genetically based and is highly dangerous, having been connected to both chronic severe pain and reduced life expectancy. GBT is currently in the advantageous position of having an approved drug on the market, as well as a full pipeline of viable drug candidates in clinical trials. The company's approved drug is Voxelotor, branded as Oxbryta, which saw sales reach $56.1 million in the fourth quarter of 2021. This was up from $41.3 million in a year-ago quarter, a 35% gain. In a recent update on Oxbryta, dated February 16, GBT announced that the drug had been approved by the European Commission for treatment of patients ages 12 and up with hemolytic anemia due to sickle cell disease. The approval makes Oxbryta marketable in non-EU member nations plus the non-EU states of Iceland and Norway. The company is pursuing separate approval in the UK. Now, turning to the pipeline, GBT has several ongoing trials of Voxelotor aimed at expanding the label indications of the drug. The company also has an ongoing phase 3 trial of another drug candidate, inclacumab, which is intended as a treatment for acid pain crisis events. Overall, this stock has no fewer than 13 recent analyst reviews, and they break down 11 to 12 in favor of buy over hold to give GBT a strong buy rating. The stock's $63.92 average price target implies an upside of 78% from the $35.91 current trading price.